It's the Crypto Sniper. I'm going to make this one short. It's a bit of a snap recording. So we did a YouTube roundabout here saying, forget your bottom callers. Bitcoin's got issues to deal with. Every bear flag before has broken to the downside. Until that changes, and eventually we can and will be wrong, please bear that in mind. There's no guarantees. There are no anything. We may well be wrong in everything we say here. But in our overall on balance of a probability appliance of HVF method rules, where you can learn more at themarketsniper.com, book a call, we expect Bitcoin to sell off and to actually perform towards a bear flag structure for further downside that could see the 10K level run. It could see other key levels that we've identified that we'll go through in this presentation. Since then, Bitcoin's fallen from around 21,800 to 19,200. Well, it's been here before, you may say. Yes, but the problem is duration, time, and the structure that it's in. The points where it's failing with these marginally higher highs. All of these are major fails in HVF method. It also points to a channel very much akin to a bear flag. I have the hiccups. I apologize. You would not get this message if you required hiccup-free content. So this constitutes a break of the basing ascending grind line, the lower segment of a bear flag, which has 3 by HVF method terms, which included a splitter with intersected with this key level just around the 20,100, which was a level that you had a bit of support on for a while, then broke and rallied back up to. You also had spike twos over there and also closely to here. Then you broke with momentum here. So you had a little bit of a tip-tap-toe over there, but not really that much. And then you ran other key levels that we've spoken of before, the 20K and the legacy 2017 high. So what is happening here now on a lower time frame, it is actually quite low volatility after a spill. You normally break key levels with some degree of momentum, so you just rolled over and you smashed through this. At some point it's quite possible and feasible, and I'm sure some yay boo artists will come out, that you even rally back up to this red line at some point, breaking a key level or a grind line, which this is. It's not a key level, it's not a price level, it's an angled line. We could indeed see a return move up and still be compliant to all the things that we have been warning about. So what are those potential downside areas for Bitcoin? Well, we've highlighted before them repeatedly. We also highlighted that you ran 4 of them in a single move on this descending triangle over here some time ago. The 20K, the legacy high, the second intrip, and of course the bear flag, all of which we had warned were potential levels, and we gave those levels while you were in the process of this break on the way down. We are now giving you the next level as you are in the process of a break, most likely on the way down. So we're pretty consistent, and we're going to keep on keeping on. So the next level is, again, you might run into the bear flag level. You may get some small reaction where you just run and you just go up. That's the first small level. I would venture it's quite a small level because we've already run this level once before, and this bear flag is now to release us from this cluster area of key levels of significance, this box. So we are surrendering another pink box. And for those that have been following this channel, you'll be familiar with the pink boxes that have held up as points of support for certain periods. You may remember that in and around the head and shoulders levels up at the 42, 43 here, and at the 30 levels as well. So you kind of been in this pink box of support, which is these 4 clusters run. When you release that, this will represent open territory. Then you come into 2 new levels. The key round number of 15K, which is halfway in between the 20K levels and the possible 10K levels. And also the 15,146. You might ask, where does that number come from? It's very, very close to the 15K as well. and you only have to pull the technicals across to see that that will represent the head and shoulder. That's right, the head and shoulder that we are still to this date, I believe, the only, but maybe one or two people have long after the market started selling back, started talking about this head and shoulders that actually includes the all-time high. So again, to illustrate that head and shoulder, we put the eye back on. You can see it in blue. It's been on this chart since Kingdom Come, very shortly after this break, and the congestion in and around the neckline area of 42k. We've given the 42k and the 47.5 level countless times as key levels of significance, which saw the flag sitting on the 47.5 and the two armpits of a complex head and shoulder be on the 42k. So as a result of that, you generated a target which came very, very close also to 15k. Excuse me, I'm sorry about this, I can't control it. I have drunk water, I've done everything else. If you don't want to hear it, switch it off. So that target is somewhere down. I'm going to go back to the 4 hour and just update you. So that target is in and around there. So you may get a bit of a bounce at the 15k. That would be some form of respite. I'm not sure that would be all though, because so far Bitcoin has dumped in key pegging zones of 10k a time. It has dumped in 10k a time. However, 10k when you only at 20, in fact you're sub 20 now as you break, is more than 50% loss. So the percentage loss keeps getting higher as you go lower. Hence, don't believe the bottom callers. Some of the biggest damage happens near the end, even though it's not the end, if it turns out to be that way. How would we need to be wrong with this? How do we be wrong with this Bitcoin scenario? Bitcoin needs to bounce back in here with high momentum, ideally, get to the other side, and then set up and break out of this top channel. That would be evidence that this scenario is no longer taking place. Until such time as that occurs, we stay with the current hypothesis, and the market tells us when we're wrong via feedback in price behavior. This is the only true natural feedback. If there's not the zeal to purchase up Bitcoin and take it up through this level, that implies inherent weakness. Further to this, I expect further developments in the problems with the likes of Celsius. So I will take you to Celsius and the structure that is occurring there. Further to that, I will also be pointing out the value of inverted charting. We'll start with the total 3, which I currently have in a bearish structure. That's it there. I'm going to remove the volume. It's relatively meaningless on these aggregates. So total 3 for us is still due to make a target, even though it's taken longer than our normal allotted time period. It appears it's winding up again in a new structure, which sometimes allows us to buy more time. So we expect it to run the better part of 295. This wind up actually produces a new target that is further and beyond. It boosts the top target, hence we call it a booster. You'll learn all about this theory and a whole bunch more in HVF method training, from beginner, intermediate, right the way through to advanced, in professionally recorded content, which will take you to the next level in understanding markets, and bring you to the level and the manner in which I trade and many of my adherents do. So let's have a look at this in the inverted context. I'm going to take you again to the total. We will come back to that chart. This is by all meanings of a very high quality structure of HVF. It's one of the best that I've seen on crypto for a while. High quality is not a guarantee. However, it does improve the probability of outcome. So this has me believe that this is a fairly high probability of outcome event. You are looking at an inverted chart of the total 3, which excludes Bitcoin and Ethereum. However, will be deeply affected by the movement of both, particularly Bitcoin. The original slightly more scraggy structure gave us a total in and around the 301 billion some time ago, with a nice little primer squeeze. You can learn about primers and fractals by going to themarketsniper.com and booking a call. In Iran, you've made a good run you've got a good first and second impulse, and you've had a rush third over there. There was a primary in there too on a lower time frame. I've covered that in far more detail with my premium community as and when it happened. You're getting this information long after they got it, because they respected me with their money, trust and time, and wanted to grow. However, nonetheless, this can be exceedingly useful for you even late. So this was discussed at great length at crazy hours last night, as I see shorting opportunities are currently very, very hot and could deliver outlier profits for asymmetric rewards to much tighter risks in a risk-reward game, where fast-moving breakouts is the best and most emotionally capable and easily adherent method to apply. In other words, the market moves strongly and quickly away from your entry if accurate, otherwise you are taken quickly out if wrong. So given this upside down total 3, we actually get a 295 billion market cap, down from where we were entering here in the 360s. In fact, we'd begun a little earlier, some of us, with additional, not on total 3, the actual trade, but on other particular alts that make up this particular index, which obviously excludes Bitcoin and Ethereum by definition. So our overall expectation is to assume success and see 295, which sees basically another 65 if we're taking it from the axis. Let's just take it from the axis, 61 and 5, another 66 billion in market cap being decimated of altcoins generally. This is a substantial sum. This is probably about the value of Binance disappearing overnight, although I haven't checked its market cap rating. I feel no need, the patterns are there, and you understand what I'm saying. So that's total 3, indicating that overall the alt category is going to go down in our view. Also, what we will show you is, as I've mentioned, we will look at one of the possible key drivers. There are highly decent people like Simon Dixon attempting to save Celsius, but sometimes the best of intentions do not lead to outcomes that are desirable, and markets take over and take things away. Whenever lawyers are involved, things get lengthy, tedious and expensive, and disagreements and new thoughts and new developments often make plans academic faster than they can be put into place. Celsius looks to me like it's actually already potentially in a break, although no really impulsive momentum has yet occurred. So this draw could adjust, particularly with reference to the funnel. Excuse me. But as I've taken it on a first qualifier basis, it looks like it's creeping its way out, waiting for a highly impulsive move to what's the upside again on inverted charts. All these are inverted charts, where the top right corner, which I am indicating over here, highlights inversion. You are looking at the chart upside down. In short, any movement to the upside is a loss of value. Currently, we were pointing out that we felt it was a short in and around the 80s through to the upper 79s level. And the expectation is that it trades sub 20. Quite possibly it'll overperform to possibly 0, but 20 cents should be run if this target performs in its current draw format. It is possible that it drips down a little bit and actually runs that what looks like our tentative stop in forming a larger third impulse, in which case we would redraw the funnel and you would still probably end up with targets not entirely dissimilar to that which we've already given you, although they would be adjusted slightly. Again, these adjustments will be done and made and available to our community members. People should also consider that shorting Celsius is extremely costly on most exchanges because of the risk involved, and the funding charge is exceptionally high. So this overall is more a proxy of failure for shorting other alts that are less expensive to short, who will suffer equally as much via correlation, and some by direct and indirect relationships with the likes of Celsius, should it go under, or should it have adverse developments in avoiding going under. So all that said, that's our take so far on Celsius. As yet, the full ripper impulsive candle hasn't happened, as it's done a bit of a walkout on this first tentative draw, so it's not super hard. as a structure just yet. But we have two decent impulses, and it's mainly about nailing down the third in a live and dynamic market. So let's take you through the alts that you could consider. The list stays the same because they already have macro events attached. This is Maker. Maker, as I've consistently warned you, has likelihoods of going a lot lower. We've suggested 278 from when it was $2,500 plus dollars. More recently to the community, for those that had missed trades or wanted to add additional trades, I highlighted it again in the low 900s, around 920. This has since progressed. Again, we are in inverted chart structures with upside HVFs. This particular wind-up may take you to the 488.5 level. There may be a rest and some congestion before our bigger macro target of 278.5 could be, on balance of probabilities, met. It may also never be met. All things can fail. And they have taken additional time so far, but this winding up structure has brought it a new opportunity and a fresh structure for events to transpire. So this is pretty much where we are. We'd expect this structure to deliver 488.5, possibly some pause, decay, pullback, and various other things. But in an exceptional circumstance, like a major loss of collateral with, say, Celsius or anything else, I'm not familiar with the case, so may be inaccurate on some of these details. I know there is some business dealings between the two. You may actually just have a blow off and both get run if it's dramatic enough. So that is Maker USD on an inverted chart. Most of what I'll be showing you is inverted. I'm teaching you how to see breakdowns by looking at them as breakups. This deals with your bull bias. This is many of the things that I treat psychologically to treat traders to see markets differently and to eliminate known biases. This is something very few trader educators or anybody tends to focus on in the development of traders. We are truly interested in the development of traders. We really want you to be better, and we record high quality content and actively implement the content we record live and on real charts on a regular basis. It's not talk shop. It's not, oh, we go and do something different anyway. That was just to sell a course and a program so that there's recorded content. As you can see, we're doing a lot of inverted chart analysis, and this is one of the things that will be taught to you on the forthcoming program that you may undertake or you may elect not to. This too is what I would consider a bit of a rushed funnel. You haven't really had a proper break yet. However, I am comforted by the break of total 3, and some alts move more slowly initially before having their real take flight candle. So the total 3 is my triggering event for most alts, although different alts are triggering at different periods. Tezos, which was rather strong prior to this recent turn down in Bitcoin, has fallen much harder recently than Elrond has, which didn't have the same degree of strength prior to the Bitcoin's fall. So as you can see, when you're dealing with a total 3, which is actually a complex component of many indices, different individual tokens may well be progressing at different rates at different times, but the overall category is likely to lose that 66 billion I highlighted to 295. We see 2380 now as an extension on our further targets that were originally suggested in and around 27 on this inverted structure that is now formed. This could be a dribble out. It could have, however, unlike others, if we had a bit of a return move on total to the funnel, where it's the initial breakout returns to the key levels of significance first, so a little bit of a gaining of strength. This could make a deeper 3 and then square up before going, and the current stop placement and just-in-time entries would be invalidated and redrawn. Neither of this concerns me to any great degree. I've been short this token for an extended period, and I'm just adding additional shorts on what I assess will, on balance of probabilities, be a wind-up process that will deliver further alpha and a little bit of a boost to the eventual target of 23.8. Watch how the news headlines will follow this technical analysis. As someone who's not overly concerned or watching or monitoring the Celsius case and just considering it as general news drivers, you will probably see any relevance in makers' outcomes with regards to this and any direct effect caused by any relationship it may have with Celsius and its meaning long before I do, as someone who's got too much and too many things to do to deal with the minutiae. In short, I'm more interested in making the money than knowing the reasons why. But they do help and they do add to interest point, often usually in retrospect in my case. In short, I trust the trade and the charts long before I trust any news feed. Any news feed is baked into the pricing, and we are not focused on what is already baked into the pricing. We're focused on patterns and anything that precedes major moves. All lagging indicators never precede a major move. Combination of moving MACD, moving averages, and RSIs are all utterly lagging, responsive mathematical formulas placed on price data that get in the way of the real price data, which is the real truth of what the market is doing at that time, to give you some smooth lagging version thereof. I advise you, whatever you do and whatever you think, you forget the notion of getting advance warning of moves from indicators. The pattern, the volume, these things have history and track record of leading major moves, whilst indicators are invariably the log being towed by the truck, where the truck is pricing and the log, or the dead cow as I sometimes say, is in fact your mathematical formula that just emphasizes and smooths out your direction. So that is an update on Elrond. Again, inverted structure, good structure, HVFs everywhere, and we are short. Please bear in mind, I may have these positions on. You may think it's serving me to FUD the various tokens to shill my own bags. I don't truly care. I've made it very apparent that I've been short these tokens for an extended period throughout this bear market since Bitcoin was still in the 50,000s plus. Sharing this information is so that you too can experience inadvertently in a kind of serendipitous manner how HVF works, or you can just watch and do nothing. It's also safe and it's totally cool, and it never could cost you any money. This is a non-advisory channel. This is small snippets of HVF trading on crypto markets where regular shorting has actually made us extended profits. Tezos on a inversion setup is in a falling wedge. Its recent strength, this down leg over here that took it to around 1.7, was a marginally higher high in what is a falling wedge. We continue to assert that we remain short Tezos, only for this to now fall quite substantially. So Tezos itself has weakened substantially after showing relative strength for an extended period. This is the nature of markets. Relative strength when the macro is making tsunami waves is just delays your drowning point by a few seconds. In short, macro will dictate, and the macro for crypto right now is very poor. We've also were the very first to discuss the role of macro. Even in real vision appearances, we continue to assert that FX should be looked at, and debt, where the debt pressures were leading into major movements in the FX markets, and we repeated to say FX is the new crypto. Everyone continued to say, tell us more about crypto, and I was saying I'm talking to you about the macro, and this is what's overarchingly dominating. Your on-chain analysis of all these stars that will unfollow you for any critique, it has no bearing or relevance. Every major Bitcoin undervalued signal has already been triggered countless times, quite extensively, long time ago. Since then, Bitcoin's gone nothing but down. Every moving average that's ever worked, that everyone's ever put up, has been bounced or broken, but they'll keep optimizing new ones to say this time it's the bottom. This is the culture of belief. This is the culture of attaching lagging, bad, smoothed out price behavior on already existing accurate, timeous price behavior as a method for trading. Good luck with that. I was also taught it when I started. It's a complete waste of your fucking time. And until you realize that, you will not progress. Simple as that. So that is Tezos, again moving out of a falling wedge with a break. Again, I stress it can have a return move. If you show up in the comments and say you see you're wrong because it's now goes 30% back after going all the way from 1.7, I'll probably ignore you. I might just chuck you out for being an imbecile. That return move could still be followed up with further upside. Again, we could be totally wrong with this, and some godly gift from the stars is bequested on crypto and there's major pumps. Generally, it's not my experience that this happens at all very often, but it can. There are no guarantees in trading, and even things that you feel really confident about can end up not happening, and some things you are only partially confident about can end up surpassing. It's the nature of life, it's the nature of probability, it's the nature of the games. We could be utterly wrong in everything we're saying in terms of possible outcomes, but I remain short on Tezos as well as Elrond, which I've continued to update you on all this time while Bitcoin is shedding ground inside a bear flag. In fact, we launched our YouTube at the high point of Bitcoin relative to the bear flag, and still held our view, only for Bitcoin to roll over quite shortly thereafter. So you've now seen Celsius, you have now seen Tezos, an inverted format, and you see why we look at inverted charts. I'm not sure if I have shown you Elrond, so I believe I have. So that has been handled. Is there one other maker? I'm pretty sure we showed you as well. So there you go. This for me feels like a breakout. It's already gone beyond the RH2. So maker is already one of those that is driving the total 3, which we also assess is in a breakout quite strongly. This is a highly impulsive move off our funnel, and it's heading up. The next main resting point would be at around 750. Isn't it ironic? Key round levels. People talk about pegging and round numbers, and why derivatives and human nature cluster around round numbers. It's because you've got 10 fingers. There's no other reason. That's why people have 21-day moving averages, because there's actually 21 trading days in a calendar month. People don't stop to think that in crypto trades is 24/7, and in actual fact, if you're reflecting a month as being significant, for which there's no reason apart from how many times the moon goes round the earth, etc., ad nauseum, random generated garbage. So here you go. You got 10 fingers, and there's 30 days in a month. That's why you have 21 in traditional markets, which people are blindly superimposed on a market that actually trades 30 to 31 days a month. So my advice is you start focusing on patterns and things that give you predictive potential on a probability basis, future possible outcomes, instead of wasting your time on meaningless indicators. Volatility measures and Bollinger Bands and volume are useful things. We use volume also in a volume by price basis. You can learn how we do that by going to themarketsniper.com and deciding you really want to develop skills that you could take for you for the rest of your life, long after all premiums are paid, and you can watch implemented on an ongoing basis with 3 webinars a week, a weekend webinar, and non-farm trade, live trading days, and regular media updates by me, by voice message, by videos similar to this, but only made available premium timelessly as and when I'm seeing it to my premium community. You are following them. They have had this information for at least 24 hours. Nothing's that new. It's progressing. We're making money. Most people are dying in crypto. People talk about Bitcoin being undervalued. The thing that mesmerizes me is how can Bitcoin be, how can you be so sure about undervalued if they are going to release central bank digital tokens, and for which Bitcoin would then represent a far more attractive option than something for which they intend to control what you can and cannot buy, and how to give it and how to deduct it in a real-time taxation world and basis. How do you think they would let you keep your Bitcoin if it's not just an on-ramp for getting skills up for a segment of the community for a future wallet, blockchain, central bank digital currency? people should really consider that it's not in government's interest for the long-term survival. There's many ways you can kill something. You can outright kill it immediately, or you can throw lots of paperwork at it, insist KYC, get everybody's name, send receiver of revenue letters, tax demands, and various other harassment for anybody who holds it until it becomes unworthy. Also control the price that it becomes unproductive, not possible, or they already control it, and the mythical Satoshi Nakamoto is in fact the old family money anyway, and they have it all. And he's also never paid tax, and guess what? They seize BlackRock acting on behalf of global tax extraction, seizes the Bitcoin for in lieu of tax not paid by the Satoshi who went away and hasn't declared his capital gains that he's made over the last 12 years. Who knows what narrative could be spun? I don't know, you don't know, but the concept is, if they intend to bring a central bank digital token for which they can control what you can purchase and when you can't, what purpose and role does Bitcoin support them? They will never, the history of the world is that this one group always asserts the power to issue money. They will never give you or allow you your own power to create your own money. Never, ever, ever. It is the ultimate power. If you don't know the Amsham Rothschild quote, I suggest you have a look. Here it is right here. Maybe I could zoom in and let you see it a little bit more. Let's do a zoom in. Oops, I am moving this text. This will make up a future recording, by the way, where we explain the principles and the risks of Bitcoin fixing this. My great bugbears is Bitcoin fixing everything. Bitcoin doesn't fix everything. It's not the ailment for monetary ills. Unruly, overreaching status power that can demand and break into anything is your greatest enemy. Government, dark state, FBI, CIA, World Health Organization, BIS are the greatest risks to your quality of money, your health, your life, and your eventual existence. And Bitcoin doesn't fix any of those things as long as the people behind of those things exist. In short, they will seize control over anything they haven't already got control over, and you can decide whether they have already or whether they're about to seize it via all forms of methods that they've used every time before. They've stolen an idea to make it a weapon to rule over you. It's time people start to understand these concepts. Buy bonds, wear diamonds is my other, but that's not part of a crypto discussion. Buying debt at the end of a debt cycle is about as smart as buying a ticket to the Titanic after it's hit the iceberg. But anyway, there's lots of people propagating this kind of information, and I'm kind of tired of it. These people piss me off. They're irresponsible. They're likely to cause a lot of people to lose a lot of money. My method, if applied accurately with real money management, you should know and write the check every time for your maximum loss, and you should have a substantial multiple in R's for your potential gain. If executed properly with the stops in play, you should never have a loss greater than that which you plan for. We tend not to trade markets where excessive gaps will occur. Okay, this was meant to be a short update. It's late at night. I've done it straight from the bed. I had hiccups. I'm sorry about that. My concept is to get timeless information to you after serving my community with respect, who have respected me with their energy, their support and good grace first. So there you have it. This is what's on our mind. We call Bitcoin down. This is a very low volatility, steady move up. There's no blow off yet to have happen. You've got those key levels I've already provided to you, which I did on the normal way around Bitcoin chart. They were, again, for the final time, for those that are watchers of Bitcoin, a possible rally back up to the grind line, which could see you still get 19. Maybe you even pump and kiss the 20 one more time. Any of that is possible. But the next levels for me represent the 15K head and shoulders target. That will represent one of the biggest head and shoulders in Bitcoin's history in terms of overall move. By the way, we have history on calling head and shoulders in Bitcoin. This is not the first head and shoulders we called, and we also debunked Michael Burry when he called an inaccurate head and shoulder. The one he called was here, and we said it wouldn't happen. He said that was a head and shoulders. Apart from you getting a negative value for Bitcoin, we said Bitcoin would actually go up in the macro sense on a falling wedge during this period. However, we did call the nestled monarch head and shoulder, which is a phraseology only existent in HVF method on head and shoulders, the complexity of which are greatly detailed. You'll note we only ever have horizontal necklines. All sorts of theory surrounding that is something you would be taught on a market sniper trading program. Here you go, that target was absolutely made. That was a success story with the left shoulder there, the head shoulder there, and the right shoulder there for a down move to this level, whereafter we pivoted bull. This blue head and shoulder has been on our screen, and as I say, I've yet to see anyone else, although we're highly copied nowadays, and people submit jaws exactly like mine that they've done on their own screens, only as if they were theirs, using methodologies that they think they've learnt on YouTube, and then say, what do you think of that? It's natural, and then they always will throw out a lower number to our downside to try rule back the fact that they're late to the party and getting out a bigger target. I think Bitcoin 1000, they'll say, we have natural geometry and method for every target and number that we give. We do not try and press by calling $1 million a Bitcoin, 250,000 Bitcoin, or naught Bitcoin. Although I do stress in this climate, as central bank digital tokens, in my opinion, are getting nearer and nearer to issuance, I do warn that the whole concept of Bitcoin's existence may come under a different threat that you have yet to consider if you haven't already. This is a bear flag. Those levels one more time. The 15K, I stopped at the 15K and sidebarred about head and shoulders. The 15K was the head and shoulder. The macro flag to 12,000 being run. Where did this flag come from? Again, we go back up to the higher time frames to remind you, and this is the driver, the last flag from the high. The previous flag did indeed perform, the one at the 20K that you have seen yourself form a flag and a consolidation around. That was a performing flag from this smaller structure that occurred at the 30,000 down to there. This is a far bigger bear flag structure that actually was part of the move right the way down from 69,000 to this eventual low over here, which was in and around the 33K. You subsequently rallied to a high here. This was the point where everyone was telling us how wrong we were about being bearish crypto and suggesting it could go down. We also suggested, by the way, during this period that gold and silver would also still go down, both of which have now occurred to a large degree, including gold and silver and obviously Bitcoin. So this flag structure is this pole superimposed here. We're even showing you how to draw the flag from the highest point. That will run you to the 12K level. That would be another key level, 15K, 12K. Eventually you end up in a position where you may have round tripped all the way back to our original first cup gold nugget funnel, which starts at 9.9 and goes all the way down to 7,981, 8,000 zone. The exact numbers are available in our community and can be read off. But this entire zonal range could serve as support or just be run on a downside move. So I repeat, from the 9K, this is now a zonal range of around the 10,000 down to the 7.9 range. The breadth of this could serve as support, I say again, or just be run before a rally takes place, and either another consolidation like this would occur or some form of bottoming behavior. So these are the levels you should be watching out for on Bitcoin. We've continued to assert that this was possible right the way from up there at 55s. We don't know, we aren't here to upset believers, hodlers and everybody else. We are here to assess dispassionately markets for the risks that lie. You can take it or leave it. This is not typical bottoming behavior. It is like every other flagging continuation structure, and as such we will treat it as such and seek to take profits out of it dispassionately. We don't get joy out of coffin dancing on crypto pals losing money. However, we do urge you to manage your money soundly, and if things do not look right and are not performing in a manner, you should consider your position. Hodling is a cult. This is blind belief that something is forever in all things. This may only be the Tamagotchi of its time to serve as an on-ramp for what will eventually become super convenient, super fast central bank digital tokens, which will have none of the initial control elements just to get everyone on board before introducing them bit by bit later once you are all utilizers of the new tool. They do not need an independent, decentralized version thereof with greater freedom. And as a result, game theory dictates that which is not required and is adversarial may well be removed or made invalid through a variety of means. This is my opinion and view. That doesn't mean it's going to happen. I'm just saying people aren't pricing it in to happen at all when they call Bitcoin undervalued. Maybe it's only 5% likely, this scenario. However, it's a highly material scenario, and the fact that something could be regulated or cancelled all the way down to zero should make up part of any valuation strategy, and some percentage should be aligned to that potential scenario or probability occurring. As a result, I prefer assets that I hold physically in this time when we are moving from one system to another, and only certain things will be bridged over, and all the debt and all the jubileeing and all the UBI and all the schemes that they will be launching will occur from one rail to another. I'm Francis Hunt. I'm the crypto sniper. I'm dispassionate about markets. I seek to avoid all forms of belief systems. I trust charts over anything else. I don't trade news. I trade the trade before the news. HVF method is the news before the news. If you want to learn more, you go to themarketsniper.com and you book a call. Prove that you're sane. Prove that you're not going to be a crank. Prove that you have sound money management principles and not here to gamble, and you too could join our community. Thank you for watching. I hope this was useful, and I'll catch